Here we have the 30-minute price chart for NIO Incorporated, stock ticker NIO. So to start the week, we can see that the stock is gapping higher a bit here. This is a fairly significant price move, and it does put the stock on an interesting trajectory here to start the week. So in particular, we can kind of focus on and kind of drill in here and look at this most recent price movement here. So right here, we can see that there is a fairly significant price gap here to the top side. This gap really formed from just below 450 to just around 460. So this is only about a 10-cent price gap to the top side, but it's significant for a few different reasons. In particular, what we can see here is that we really did break through most of the exponential moving average cluster. We have this orange line here, this yellow line here, followed by this orange line, which is the 50-day moving average. Yellow is 20 period exponential moving average, not day. This is a 30-minute price chart. So yellow would be the 30, the 20 period exponential moving average. Orange would be 50 period exponential moving average. Purple would be 100, and the blue would be the 200 period exponential moving average. But as we can see here, this price gap, what it really did effectively was to sort of break above, all of these exponential moving averages, really. We are seeing a bit of a decline back into these areas currently, but it is an encouraging upside break because it does sort of set the tone, set the trajectory here to start the week, and this is a positive development here. So currently, we can see that share prices are still kind of coming into contact with this longer-term trend line that we've been watching. When we move down to this 30-minute chart, for the most part, in recent videos, I've mostly been using, like a 4-hour chart or maybe even a daily chart. But when we're looking at those charts, you really can't see this trend line break very well. I did want to kind of zoom in here a bit so that we could see this a bit better because, this really has been a fairly significant break to the top side, even though it might not look this way on the longer term timeframes. So, this is still the important kind of downtrend line here. What we're really trying to determine at this point is whether or not this trend line is actually broken. Have we recently just seen a false breakout, or is this a legitimate, valid move that we're seeing to the top side here? So to start the week, I do think that this is an encouraging development because if this happened to the downside, a very different picture would have emerged here. We would have broken through a double bottom essentially. If we're looking at these support zones, which were created by the July 9 lows, which came in at roughly 443, and then the July 19th lows, which came in at roughly 441. We can see that this area now forms a double bottom support zone. If we gapped lower here, this would be a problem because we would have broken through this support zone, possibly without even filling the orders in that support zone. So it really would have complicated things if that had occurred. So it's fortunate here that this move was to the top side. So it might seem like this is maybe it's it's only 10 cents. But we did move above the moving average cluster, and we did sort of prevent this downside breakout from happening. We would have invalidated a double bottom support zone. And if we're really looking for a turnaround here, and we don't want to be considering these breakouts up here to be a false breakout, then we really do need to see that support zone hold. This is going to be an important support zone here going forward. So just above 440 is going to be a level that we want to watch relatively closely here going forward. So, overall, this is a positive development. And as we can see, we're now coming into very close contact with this downtrend line, with this longer term downtrend line once again. So, we really haven't seen much of a convincing break here. We've seen a little bit of a break. It does look a bit bigger when we drill into the 30-minute charts. But we also saw a reversal relatively quickly, and then we broke support at 455. So, this downside price move, you can still argue that this is a false breakout. So for these reasons, you don't want to really be seeing a price gap, in the downside direction. Because we probably would have lost lost the support zone at just above 440 without possibly even filling those orders. I mean, that really does kind of make things a bit more erratic than they should be, a bit more unpredictable than they should be. Price gaps tend to be a factor that increases volatility and uncertainty in the chart analysis. Makes it more difficult to determine probabilities and to figure out a most likely outcome for trading. But when it occurs like this, it does make it easier because we weren't breaking any significant price levels in the process. As we can see here, we are getting a bit of a failure at roughly 465. Not totally surprising. This is a bit of a historical resistance zone, as we can see here, and we are still coming back into contact at this point with that downtrend line. So currently, what we really want to be seeing here, we don't really want to fall back into the moving average cluster. That can complicate matters. It can be difficult to get out of the moving average cluster once you fall into it. So what we really want to see here is for the prices to stay above this moving average cluster and then to see a break above this 465 level. If we're able to do that, once again, we would be above this prior downtrend line. And then we would be back to focusing on this double top resistance zone, which comes in just above $4.90. So all of this is really kind of the what is going to be required in order to see a break of this to the top side and to really start testing this $5 mark once again. This is going to be important because it's an important psychological level. Many people do tend to focus on these round numbers, $5, $10, $100, $1,000, things like that. I generally don't think that those levels are so important, but here we can see that there is a major historical resistance zone that comes in just ahead of this level. So if we do see a break here, we should probably be seeing some follow through here above $5 as well. But most importantly, in my view, what we're really looking for is a sign that this descending triangle pattern is broken. This downtrend line here, followed by this period of sideways consolidation. What we're really looking for here is sort of a resolution of this pattern to the top side. Overall, I still think it's possible because I still think that that's the major outlook because the indicator readings are largely positive, as we can see here in the relative strength index. General momentum remains positive, and we're starting to see a break of the shorter term downtrend momentum that has been developing since roughly July 3rd. So here are the factors that I'm currently watching. We are seeing a price gap upward, and the indicator readings are remaining supportive. So here's the current market outlook and analysis for NIO Incorporated, stock ticker NIO.